Hello you guys, welcome back to my channel. In today's video, I'm going to give you guys the smart money bootcamp that y'all been waiting for to find Wyckoff schematics from beginning to end. So if you didn't get your notebook already to take notes, now is the time and let's get started. First of all, I want to tell you guys that I found this trade and I took it I took it the day before yesterday and it played out beautifully. So I want to show you guys from beginning to end how I came about this trade. Activated over like 4 days. So I want to show you with what it looks like for me to follow and find a trade from beginning to end. A lot of you guys are getting on the computer, running around looking for schematics, and you're just not going to find it that way. So let me show you from structure, point of interest, the schematic, break of structure, entry, risk reward, and exit on how you guys can get trades like this. So if you guys want to learn more, and you guys want to see more, long content like this, and join the platinum package, you guys. I have over 3 years worth of Zoom recordings and detailed sections on everything we're going to go over today. But I want to give you guys a free value, show you guys what it's like to take profit and how you guys can find it in real time. And I want this to be a free resource for you guys to use over and over. So first of all, we're going to pretend it's Sunday because I like to say structure Sunday, where you start on the charts with just simply going over structure. And this is how you choose your pairs. So you want to choose your pairs based on news and structure. So structure meaning clear down structure. To get clear down structure, you need four lows and 4 lower highs. If you want up structure, you need 4 highs and 4 higher highs. So what I mean by that is you want either 4 lows like this, right? Low, higher low, low, higher low, low. That's clear down structure. What's not clear is down structures. You have low, high, low. Let's say this high actually goes above, and then we have another low. So we kind of break the chain when this goes higher. So any pair that's currently in a structure like this, we do not want to use on a Sunday. Okay, so another thing is when you're doing structure, and a tip to write down, I'll try to help you guys when to write down the tips. You want to start from right to left. Right to left is price action. So you want your highest high or lowest low. This is down structure. So our lowest low is what we're going to start with to make structure. We're going to use our mouse. Use your mouse, not your eyes. Go all the way up until you can't go up anymore. That's your high. So we're not marking this because there's a higher high. We're not marking this because there's a higher high. We're going to go low until there's no more lows. We're not marking this because there's a lower low. We're going to go high. There's no more highs. And that's why you have to use your mouse. Low till there's no more lows. High till there's no more highs. So right now, I'm not going to scroll to left because we already have high, low, lower, high, low. So I don't really need this one or this one. Okay, so you only need 4. Anything past that, if we just keep marking left, then the structure is not clear and this data is old. So this is the recent data that we're working with. So this is how you do basic structure every Sunday. I just literally go through all my pairs in the news and do this and walk away. Now that we have our overall structure, I am zooming into the 30-minute and I'm looking at these retracements for healthy price action. So first thing you want to do is look at the overall range and see if there's anything in the upper 50%. However, we do still have clear structure going down. So all of these structures are healthy retracements. So what does that mean? If this, let's say price just shot down, then we definitely have to retrace the whole range. But because price pretty much went down in a healthy movement, right? So come down, and then we come up and retrace, we come down, we come up, retrace. This one's 50%. This one's probably like a 318, which is still valid. And this one has retrace as well. Okay, so this was a healthy movement where we can actually validate the minor structure here. And personally, I don't mark this up, so I'm going to make it green, just so you guys know. I don't mark up all the random structure. I just see it visually, but I'm just doing it so you guys can understand. Now, if we look here, this is our low, and then price is kind of coming up again. I'm expecting, because we are getting another high, right? Here we have a new structure. Why? Because we have low, high, lower high, high. So we have an up structure officially from this point to this point. So at this point, I think price is going to go up more, but we are still in down structure. So at that point, I'm going to look for how high this is going to go. So I'm going to look for points of interest. My points of interest are going to be, and I'm going to drop down one more because the structure, you guys can see the candles are smaller. So it's definitely a little counter trend. So I'm going to mark up this imbalance, and this is where I put an alert. And I'm going to come here because price is going to come to one of these two places first. And I put my alert. Maybe I do this on a Sunday and a Monday, or a Monday, and I walk away until price comes here. Okay, so I have my alert set here, and I'm going to wait for price to come. So let me just replay this a little bit. So my alert goes off. I'm going to go to the 30-minute or the 20-minute and see if this is a complete fill. So this broker is forex.com. I use a Wanda. I just show you guys examples on this broker because my other broker is actually full of charts. I'll show you after. So this is a complete fill on the 26-minute. Now, you see how it wasn't completely filled on the 20-minute? And let me explain that because sometimes people don't know what I mean when I say completely filled. Okay, so the gap is here. The gap is here. So when I use this is the fill of the gap, right? So if we look at the border that's now purple, that line is where our candle should meet. And that, as you see, our candle doesn't come all the way to the top of the line, which means it's not a complete fill, which means Smart Money didn't completely close their trade there. So if we switch to 26-minute, we can see the full gap is right here, right? It starts here. Now, it can end here or all the way down, but I just keep it small because we're only using this line right here, but I still want to represent that there's a gap where this candle and this candle wick does not meet. So that's why we use the box. And as you see, price comes up here, okay? So this is a complete fill. Very important. So we find the complete fill. So my alert goes off and I'm in the point of interest. So what now? So now that we have that, I'm going to go back down to the 15. I'm going to delete the structure for distraction purposes. And I'm going to start looking for my schematics. So I'm going to use the Smart Money Playbook. You guys, using the Smart Money Playbook, I'm going to find the distribution. So this is a distribution type 2 where we have 2 drives up. So these are just some of the examples that you get in the playbook. All the different accumulations, distributions, and examples are already played out like the ones I'm showing you now. So you guys can actually see what it looks like. Now, the difference between my playbook and any other book is that I'm actually using candlesticks with the entry and the exits. Okay, so I'm showing you exactly where everything should be placed, and I have that all written out in detail as well. So this is available for only $23, you guys. The link is in bio. So I'm going to show you guys what this looks like on the charts. Also, I do have a new course coming out called Smart Money Risk Management course, where I'm going to go over how you can always find 1 to 10 trades, my confirmation checklist, and more. So I'm not going to go over my confirmation checklist in this video. Definitely click the link in bio and join my email list to get notified when that course comes out. First thing, we're going to start with our 3 drives up. So we're going to start with our highest point because that's what brought us into the point of interest. It should always be capital. And as well, in these tips, you guys, you know, if you join my academy, you need to do all this, or I'm just going to tell you to fix your charts anyways in the group chat. So clean work always, you guys. Your label should be directly above the candle that you're referring to, so it shouldn't be over here when I'm referring to this exact wick. So a lot of people say, oh, you're always so picky about how you mark up your charts. You guys, this is the schematic to success. This is the blueprint to success. Like, if you can't draw straight lines, how are you supposed to make $10,000, $50,000, $100,000 in this game? So 3 drives down, right? We're going to start UTAD, UT, BC. Opposite the BC is always your AR. Now, before we continue, we can use our trading range alignment. Also, other books don't talk about trading range alignment at all. Weird. Luckily, I've had private mentorship by millionaires that taught me this. So your schematics should be measured based off your trading range going in and out of your trading range. You see, it comes out twice, comes out 1 time, then it come out another time. And another key you can write down, trading range can be bodies or wicks. It just depends on what your schematic's doing, and you're just going to check whatever makes sense. Okay, so again, perfectly starting at the wick, and we're going to go to our minor sign of weakness. Okay, so we have phase A, B, C, and we're waiting for D, which means we're waiting for our sign of weakness. So I would use a ray. Make sure you're using rays, write that down, because if you use lines, if it doesn't actually hit the line, you won't get notified. So you want to notify and put, I'm in replay mode, put sign of weakness, okay? So when that goes off, okay, so our sign of weakness went off, right? So now we are going to put our SAL, and we're going to find our entry and risk to reward. So let's delete this alert. Right now, we don't have any trading range alignments on this time frame. So let's drop down to the 5 minute. So you guys see how I didn't just rush all the way down to the 5 minute. Let me go to the 10 actually. And we're spending time trying to figure out what is the best time frame. So I have a little order block, but I don't love it. I'm gonna go back up to the 15. And it looks more like a major order block here. Now, I want you guys to understand the reason why I'm using this area is because, so 50% of the order block. So we don't necessarily have trading range alignment, as the trading range is a little bit higher. So in this scenario, we don't have trading range alignment, so we can delete the alignment. This is going to be the order block that we're using. This right here also, you guys, is something called migration block, so we'll just put an MB for that. And I usually do put a little block to represent what that looks like. Let me just fade it a little bit because it's not a priority. So this is the order block followed by massive UPA. Order block, we're going to use 50%, and we're going to grab our short. We are going to place it right on the line. Make sure you don't place it anywhere else and move it. Just place it right on the line. Start with our stop loss. Bring it right down to either this wick, which is an 8.1, which our SAL is pretty close, so it's not going to give us the best risk to reward. So I'll bring it down right to the bodies for a 4.3 and take it right down to these bodies, which gives me a 10.6. Okay, so watching that play out. Actually, let's pause it. Okay, so as you see, very close, right? But we did not get stopped out. Now, your broker numbers, make sure you use those numbers. I go over what brokers numbers is in my risk management course, where it tells you what entry is best used depending on your broker, not just TradingView. And personally, on this is fxforex.com, like I said. On Oando, it shows a little bit different. You also have an imbalance that shows, and I'll show you guys in a second. But first of all, I want to show you guys how I manage this trade. So first of all, I'm in this trade. This is why you can't go break even or stop loss and profit, because you will get stopped out. So personally, I do not go break even until I collect partial. So once I enter, my new alert is at 90% of the trade. So this is a 1 to 10.6. Around here, it's at almost a 9.6, aka 90% of the trade. I only collect at 90% of the trade, and that's when I go break even. So this will play out, and as you see, this is why, like, it will come and stop you out and play with you. This hit pretty quick. This was actually, as you see, in the morning, so 6:30. I woke up at like 8. So I was already stopped out in profit, and look how perfect the TP was, you guys. Okay, like the TP also is very important. Like, this is smart money magic. It will come out the same as your SAL. So anyways, I would have went break even as here, and as you see, I actually wouldn't have gotten stopped out at break even. I would have collected 90%, and I would have been trailing. I didn't have time personally because I was sleeping. But this is exactly how you would enter a schematic like this. Now let me show you on my proper broker. So this is the same trade in real time, my real markup. And as you see, the same scenario. If you guys want to learn how to find the schematics like this, and definitely purchase the Smart Money Playbook. The link is in bio. And I hope you guys got value, and I'll see you guys in my next video.